What is up, good people? Jungle Inc. here. Hope you're doing well. Market still looking pretty nasty out there. Bitcoin down another 1.8% on the day. XRP, though, making a little bit of a recovery, up 3%. See a lot of people out there going, see, we told you the court case was meaningless. I'll tell you this. If we would have had this crash and XRP had not had that big run up, well, we'd be sitting lower. Best believe that. Or if XRP, or Ripple rather, had lost that court case and it was them trying to appeal, we'd be a heck of a lot lower. So for sure, it matters. It just doesn't mean court case is over, off to the moon. It's just one, major step in a long journey here that kind of sets the stage. We will have to see how XRP performs over the remainder of this year and then into the next bull run, whenever that starts. I think it's going to do pretty well. So I wouldn't get too down on this stuff. And in general, we're about, 8 months away from the next halvening. We got some big drivers on the horizon next year. At some point, people will start front-running that, of course. But I think, this is going to be kind of a flat year to end the year because there's just not a heck of a lot out there. Now, anything could happen. You got to be prepared. But what I'm going to do here is when we have these drops, and there may be more, and they may be significant, each time, I'm going to be acquiring value because you never really know when the last one's going to come. That last great opportunity, especially when you look at the altcoin market, things are pretty depressed. We keep getting smashed down. I'm going to be taking advantage of this, but remembering, man, it can get a heck of a lot uglier. So make sure you have some dry powder to take advantage of these types of times. When prices are red, when they are nasty, when everyone's upset, it's probably a better time to buy. If you were going to buy XRP, down 20% is a lot better than up 20% when trying to put your money in there. So, that's the way I'm looking at this. For me personally, have my XRP holdings, have my Bitcoin holdings. I'm kind of filling out the rest of my portfolio using these crashes, if you'll call it that, to my advantage to do so. So I have a nice well-rounded portfolio. When we're off to the races the next time this sucker goes, and it will go again. Don't worry about that. Now, how low can Bitcoin go? That's the question on everyone's mind, and it can go quite low. Make no mistake. We just don't know. Again, that's why I'm saying you see these opportunities, price coming down in the crypto market, take advantage of it. Make sure you are finding value in buying. Don't try to call that perfect timing, because if you miss it, you really could miss it, because I really think there's some big things on the horizon in 2024. And if you miss the bottom here, we may not be dipping down again. So even though it may get more vicious, it may go down much farther, you have to prepare yourself, because I think we're kind of in our final hour here. May take months to play out, but this may be the last great opportunity to load up before things start taking off. I expect at some point in 2024 to see this thing start, and it'll probably run into 2025. Again, I'm no Nostradamus. Maybe it takes longer. Maybe it goes quicker. That's just the way I see it playing out, and I'm going to plan accordingly. Now, beware of the crypto spot ETF bubble. Everyone's making wild predictions. When we get a spot Bitcoin ETF, man, we're going to go to 150,000 overnight. Been talking about this. Rarely is it singular moments in time that really set off bull runs. These are important events, but they are not to be used as this is going to happen and then, life-changing money. Doesn't work like that. It will eventually take off for no apparent reason, but all of these things along the way is what gets you there. A Ripple victory, big for all crypto. A Bitcoin spot ETF, big for all crypto. People are trying to say these events don't matter. Well, something's been mattering because crypto has come a long way over the years. If you go back in time, before that big 2017 bull run, not that long ago, XRP, we used to have $400,000 a day in volume. That's it. And guess what? XRP wasn't a no-name coin. With that type of global volume, it's the number 3 coin in the world. That's all the number 3 coin did, about $400,000 a day in trading volume. Now, some days it had higher, some days lower, but that's kind of the range it was in. We've come a long ways where if you were doing $400,000 in daily volume, you ain't even hitting the charts. You're insignificant. You are really a micro cap cryptocurrency, So something's, getting us through growth and adoption, and it's all of these things. Even though it's not that event happens and overnight we have success, it's still very important. and it starts onboarding more people, bringing in more investors and long-term investors. And that's what's going to continue to grow this space. As we have applications we can use for practical purposes, big deal, and great ways for investors to easily and safely invest in this space. Those are the kind of the things we want to keep an eye out for. SEC slammed for misusing XRP reports. Ripple in these reports, they're not perfect reports. I think there should be guidelines that say, if Brad Garlinghouse or David Schwartz or various insiders are selling, they should be disclosing that. I think that'd be good for investors. We should have a lot of information we don't get in these reports, but it's voluntary, and they are being transparent, and they're telling us a lot of information that's good to know, and they are really harassed for doing so because the SEC just collects all of that info and then uses it against you in court. Something that's good for investors, makes them more informed, is a model for the future. Not perfect, but a good move. And the SEC weaponizes that, and it's absolutely wrong. They should be encouraging that. They should say, you know what, this is a great start. We suggest you add these, extra information sets. We think this is an important area to address. Let's make these reports better. Not let's, collect all this little information and like a sleazeball jump out and sue you with it. That's a big problem. And again, until we get clear regulations, which is going to come from Congress, this is going to continue to go on because this is how they really have to play because they don't have regulatory authority. They don't have the authority to come in here and regulate this space properly, so they have to play these little games. That's all they have, fear tactics. Galaxy Digital here, Mike Novogratz talking about the drivers of value for Bitcoin. Let's take a listen here.
Listen, Bitcoin has two vectors that drive price. One is adoption, like the more and more people that understand it, that like it. The ETF is the single biggest thing that will help adoption, right? Larry Fink coming out and saying, I believe in Bitcoin, which he has, right? And the largest asset manager in the world trying to get engaged. Invesco, our partner, getting engaged. There's a lot of salesmen in those places. So that's going to drive price.
We have to remember, it's not just that BlackRock wants to get involved. The reason BlackRock wants to get involved, well, it's because a lot of their clients want in. They want to invest. They just can't do so safely right now. They can't take that big, investment capital and just throw money on a Ledger Nano. It's not appropriate for that type of investor. So that's why BlackRock's, rolling out these various products, because they know there's massive demand there that's being unfilled. And soon you're going to see this money flood into crypto. And just like we're seeing with the futures-based product that now looks like we're going to get an Ethereum-based futures product, spot will be the same way. You probably get an ETH spot first, and then it'll roll off to other major cryptocurrencies. Just like with anything, people don't buy just one stock. People aren't only going to invest in Bitcoin. It's going to go to the broader space. But right now, that's where the big institutional interest is with Bitcoin, and that's going to kick things off, and that's absolutely fine. Will be a huge moment for all cryptocurrencies. Very similar, in my opinion, to the Ripple court case. That was big for all coins. It makes it very difficult for the SEC to attack the rest of the space. Bitcoin ETF is, in a similar way, big for the whole cryptocurrency ecosystem.
The other is Fed policy, right? Bitcoin went from 6,000 to 69,000 because the Fed started taking a fire hose and giving everyone money. Like, it was supposed to go up. It was also supposed to come down when Chairman Powell took out his magic hammer and started bashing inflation on the head, right? He has been very hawkish. And so it's this inflection when they go from hawkish to dovish at the same time when the government's not acting responsible in spending. We spend too much money as a government, right? We're at 24% spending, 24% of GDP spending. That number traditionally has been 20.
I'll add one thing to it. Also, what he was saying there. Yes, the environment that was created by all this fiscal stimulus, all this money getting spread around. Yeah, that sent asset values flying, and of course, crypto was part of that. But in my mind, it might have been a little worse for crypto, and I'll tell you why. People didn't have to chase yield. They were able to invest in stocks, in real estate, and just get, unbelievable gains like you couldn't even believe. And so I think that took some demand away from crypto. People are going to invest in what they know, what they're comfortable with. And that ain't crypto. This is emerging. This is new. We want not like terror everywhere, precious metals crashing, stock markets crashing. Like, that's not good. That's going to bring us down too. We want a healthy stock market and financial space, but not one that's going to the moon with everything, because it's just going to pull a lot of interest away from cryptocurrencies. We want things kind of flat. We want people to go, well, man, if we're going to get those gains for the year, we're going to have to look elsewhere. We're going to have to allocate a little more money, over to crypto. And I think that's part of what we're seeing here with those money managers saying we need it right now, because where are they going to get the return? Are they going to get it from real estate, which is already super high? We look at the stock market, it's kind of rough out there, and still stocks are very high. You got almost a $3 trillion Apple and lots of other $1 trillion companies within tech. And where are you going to go to get, your clients those returns? Well, one of the areas they're going to look is within cryptocurrencies, because we've come a long ways over the years, but this is an emerging asset class, and there's just a ton of growth ahead of us. And even a small allocation can make a massive difference over time because of the type of growth we're talking about here. It's all risk versus reward. We've seen from those Fidelity reports. The dangerous thing is not investing in cryptocurrencies. And a 1 or 2% allocation to cryptocurrencies will give you better returns, and you can also pull some risk off the table and get some fixed income or something like that. And so have less risk, better return. The only bad move is absolutely no crypto allocation. They understand that. That is the future, and that's why you see this push. They need it. They need somewhere to stuff money to get returns. They're not going to be getting it from some of the traditional areas over the next few years. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.